Nvidia is all the rage now. Numerous announcements from the company could push them even higher, and some people are predicting an increase of 300%. If this happens, we're looking at $350 per share. Is this even possible? How can Nvidia do this? Well, let me explain. Disclaimer. Nvidia is making waves right now. This week, there are tons of events that will shape the future of the company. As you may already have heard, Nvidia is having a very important event this week, and there could be a lot of implications because of this. Hear me out. This is one of the craziest weeks of the quarter in the stock market. Nvidia is going to take center stage with its highly anticipated AI summit. And on top of this, earnings season kicks off once again, adding even more excitement. While it may not be Nvidia who's announcing their earnings, the excitement from the market is still very palpable. For Nvidia, this week is a make-or-break moment. The AI Summit is where they will showcase their vision for the future and try to convince the market of their growth potential. If they succeed, it could mean huge things for the company moving forward. And here's what's exciting. Investors will be paying close attention to what they have to offer, especially in the AI space, which has become a major driver of their success so far. The stakes are incredibly high for Nvidia. If they nail both the AI Summit and how they manage the hype around the earnings of other huge corporations, the company could reach new heights. This could solidify Nvidia's position as a tech giant, but any misstep could shake investors' confidence. It's going to be an intense week for Nvidia, and the market will be watching closely. And while all of this sounds like good news, not everything is actually going well for the company. There's something terrifying that's happening right before our eyes. But not everyone knows this. So pay close attention. China's top chip maker, SMIC, has just extended its rally to 21%. And it has now hit its highest level since mid-2020. This surge is drawing a lot of attention from investors, especially in China. Especially since this is where the chip battle with the rest of the world is heating up. For people in China and those closely watching this intense competition in the chip-making industry, investing in SMIC might be one of the smartest moves they can make. And some people in the US could also be leaving Nvidia to get shares of SMIC. You really can't blame them, though. After all, right now, it seems like SMIC and Huawei are positioned to capture a significant portion of the market share that Nvidia currently dominates. As the competition between these companies intensifies, Nvidia could lose ground in China, giving SMIC and Huawei a big opportunity to grow even further. The geopolitical tension and trade restrictions have put more focus on China's ability to build its own chip-making capabilities. And SMIC's rapid rise is a reflection of that. For investors in China, betting on SMIC feels like the safest play in a market where other tech companies might be facing more challenges due to global pressures. With SMIC showing strong growth and momentum, and with Huawei at its side, this could be just the beginning of a long-term shift in the balance of power in the chip-making industry. Many see it as the only trade in the China market that makes sense right now. But this is just the start. The week isn't just about earnings and the AI summit of Nvidia. We also have the US government releasing the CPI and PPI numbers, which, if these numbers aren't going to live up to the expectations of the market, could pull the tech industry down, and Nvidia is at the head of this. And here's what's even scarier. All of this is going to add a lot of volatility to the market, leading to sudden movements throughout the week. A flat or even slightly red October would actually be expected, especially since September was such a strong month for the economy and tech stocks in general. Historically, October right before an election is not strong either, so the market might not see huge gains, but that could help it cool off after recent highs. For Nvidia shareholders, though, this could add another layer of concern. Volatility, especially in times like this, often leads to panic and big sell-offs. Nvidia's stock could be hit hard if the broader market starts to dip, even slightly. After such a strong run, any sign of trouble can make investors nervous. And with Nvidia already in a high-stakes week, this added market uncertainty could put more pressure on the stock. Shareholders will have to brace for a wild week, knowing that the combination of earnings, economic data, and volatility could cause sharp reactions in the market. For those invested in Nvidia, this might be a nerve-wracking time. However, all is not lost. Despite all these updates, we're still looking at a strong Nvidia. In fact, all eyes are on Nvidia's stock price. This is because of the Conduct's collaboration with Nvidia and the potential surge that Nvidia will get from this. Aside from the fact that this could bring stability to Nvidia's stock, this might also help out with the volatility of Nvidia. But that's just the start. This partnership is expected to unlock huge potential in several key areas, especially in the growing fields of Web3, gaming, the metaverse, NFTs, and real-world assets. October and the entire fourth quarter are packed with important developments and major catalysts. One of the big highlights is the AI portal, which will enable communication with Condux's unique NFTs. Nvidia's role in this could push the boundaries of what's possible in digital interactions. There's also a full redesign of the Condux website, which is expected to improve user experience and make the platform more accessible. In addition, the highly anticipated Disclosure NFT collection will be revealed, and the launch of a 3D digital asset marketplace will be powered by Nvidia's graphics delivery network. This is significant because it connects Nvidia's top-tier graphics capabilities directly to the digital asset world, offering more advanced visuals and performance for those engaging in the crypto space. The impact this will have on the narratives surrounding Web3 gaming, the metaverse, and NFTs is expected to be massive. The potential use cases are going to blow people's minds, especially as more details emerge. Nvidia's involvement here is crucial, and investors who are watching this closely are well-positioned to benefit from the company's future growth in these areas. With a future like this, it's easy to see why Nvidia could now be undervalued. As a matter of fact, if we compare Nvidia to another tech company, you could see that there's a huge chance for them to grow. Let's look at Palantir and how they size up to Nvidia. Nvidia has a forward price-to-earnings ratio of over 30, while Palantir's is at over 90. So when looking at Palantir trading at $40, it feels similar to Nvidia trading at $350 or even higher. This comparison shows how high expectations are for Palantir's growth, despite the big difference in valuation metrics. And with how Nvidia is progressing as a company, it could be possible that they're going to grow to 3 times where they are now. And the fun part is that their stock might not be considered as overpriced, since they're more stable than Palantir anyway. If Palantir can continue to hold strong at this high price-to-earnings ratio, and investors still believe in its long-term potential, it suggests something important about the market's willingness to accept high valuations for growth companies. Palantir's success at these levels would signal that its future growth is more than just hype. It's something investors are willing to bet on. This brings us to Nvidia. With a much lower price-to-earnings ratio compared to Palantir, Nvidia actually might be in a stronger position. The market isn't as concerned about Nvidia's valuation being too high, and that gives Nvidia more flexibility to climb higher without worrying about overvaluation as much. The potential for Nvidia in this scenario is significant. Investors could see Nvidia as a safer bet than Palantir in terms of value, while still benefiting from Nvidia's growth in AI, graphics, and other sectors. If Palantir can rise with such a high valuation, Nvidia has an even better chance to expand further because they're seen as being at a more reasonable valuation by comparison. This opens up endless possibilities for Nvidia's stock, especially as they continue to lead in key industries like AI and gaming. Investors watching Nvidia closely might see this as the perfect time to bet on their future. And here's what's even more exciting. Nvidia has been consolidating for months, forming what looks like a large symmetrical triangle as the company's next earnings report approaches in 38 days. This period of consolidation could lead to a potential butterfly pattern developing on Nvidia's chart. If this pattern plays out, there's a projected price target of $154 according to a user on X. Investors are watching closely, as this technical setup could indicate a significant move in the stock's direction soon. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video. And don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.